All right. Good morning and welcome back to the London session. And good evening to those who are joining from the Asian side of the world. Uh, let's get started off with the wave count, but let's first touch base with gold. The action has been in the yellow metals in the last couple of hours. It has sprint one more high, a lifetime high around 2954. Technically speaking, our 2955 stop loss was almost hit, but 50 cents, we were just saved by 50 cents. It doesn't really matter, but what we have done in the portal is to all right, so let me do the count here first. We have been expecting an expanded flat structure ABC. Now normally wave B would be 38.2% of the distance traveled by wave A. In this case, it has exceeded to the 61.8, the 61.618, and that was 2947. Today, what we have seen is a print just above that by a few points. That is completely allowed. This could be the last price where prices should ideally reverse, and if it doesn't, then it would be a bit of trouble. All right, so. Until now it looks like we can still allow the short positions to remain active, and if you are still wanting a further price confirmation, it is better to stay away if you haven't traded yet, but allow price action to break below the 2910 and 292875 mark. That's the first support coming in at 2917 and followed by 2875. Alright, so we need to see the break below 2917 first, and then a slight corrective rally and continue drop below 2877. So conservative trading could be to allow prices break below 2877 and then uh, sell on a correction. Aggressive trades are still on with a stop around 2959.50 right now. It has been readjusted to this price. Aggressive shorts. It stop around 2959.50. All right, but so if you need further price action confirmation, then please allow a break below 29118, possibly below 2875 for the short positions to remain active or to trigger short positions further. If you look at the daily chart, when there is a strong bearish divergence scenario, it's a case of strong bearish divergence which is seen across the time frames. If you look at 4-hour time frame, 4 hours is a bearish divergence. The daily chart is also a bearish divergence. You can see that the price action rallying, but the RSI lagging behind. Multiple time frame is showing a bearish divergence, so it is quite possible that gold reversal may be on cards, but it is not being confirmed by the price action. Okay, so we just need that price action confirmation. It can come right now, it can come about 10 points higher, it can come about 20 points higher, but it's ideally going to come at some point in time. So conservative trading, it's better to wait, and it's nothing wrong in waiting for a couple of more sessions. Since our active trades are on aggressively, we would like to stay in the trade and see how the price action is behaving in the next few hours. All right. Otherwise, the daily chart is indicating a clear story about if this is not wave 4 in the making, and if fifth wave has already begun, then the price action is supposedly going much higher than what we have. I mean, we've already projected those levels, but just to redo those, if that is wave 3 and wave 4 is already in the making, it's already done, then the fifth wave is proceeding much higher levels, towards much higher levels. Let me just give you a target potential. If the fifth wave is on, we might have to get out of the short positions at some point in time. We might have to flip towards the long side as well, but it's very difficult to flip towards the long side at this point in time. So it's better to wait on the sidelines for a while because it's pointing towards the 3300 mark. All right, the long side. If the fifth wave is on, we will have to exit some point in time. I mean, 59.50 is the last stop being adjusted, and we would be out of the trade if it triggers, and then we'll have to stay aside, wait for a corrective decline to materialize, and then we would like to issue a long trades in gold. All right, that's the situation in gold right now. As we move into the London Times, let's move to the Euro USD hourly chart. Okay, now prices have inched higher slowly but steadily. We still need to see further confirmation of a solid foundation, of a solid bottom in place. That is still overlapping. So it's either wanting to form an expanded flat wave 2, or it is still carving wave 4 and maybe one more drop below before picking up higher again. But in a nutshell, if we go about the trend in euro, it is wave 1 and 2, and the third wave could be expanding itself, or it could be a potential expanded flat or a triangle in the making where we are going to see another ABC lower before the price action turns higher again. So we need not really worry about which pattern is unfolding for the second wave to terminate. I think we can remain partially long right now, and further longs can be initiated around the 340 320 zone, and stop loss I mean, it's better to keep your stop loss away from the noise around 200 or ideally from 150 levels. All right. So Euro USD is actually still good, and it is going to remain good for a while because the daily chart has produced a strong bottom at 1.0177 right there on the 13th of January. So what we are seeing right now is a continuation of either the third wave or I think it's more probably the third wave being extended, or it's going to be a bit more sideways for a while. Only time will tell which pattern is unfolding as the second wave, or is it complete and is it the third wave underway. But please keep track of the upside target around the 750 first and followed by 1100. All right. Okay, let's move forward to the dollar index now. Now, if you look at the price action, dollar index has reversed from 107.09 last time when we were talking during the Tokyo Sydney overlap. It has already reversed, and it's looking like I mean, if it's wave 4 complete, then wave 5 is going to go towards 105.60. All right, so be on the short side, please. And if at all the second wave is still unfolding as a complex corrective structure, we are going to come to know either from current price or from 105.60. In any case, selling on rallies is absolutely valid structure, and it is good to remain partially short right now. If you are completely shorts, no problem at all. Anything that you sell in dollar index is going to yield profits, brothers. Okay, so that's not a problem at all. If you are completely short and you don't have any positions to add further, no worries. Please keep your stop loss at 109.85. When prices come to 105.64, it's good to take partial profits, and on a pullback again add further. In any case, we are going to stay with each other and try to capture each small wave possible. All right. Right now, dollar index looks good on its way towards 105.60. All right. So it's okay to remain on the short side, and if possible, we will add further around 108, 108.20. All right. Okay, gold we have just seen. We have just seen gold. For those who are just joining, I might want to just quickly update. Aggressive traders, we have adjusted around 59.50. The risk has been adjusted slightly to cover the noise, but if it triggers, it triggers. We are not going to adjust any further because 2947, 2947, 2949 was the last level of an expanded price structure being valid. 2949, all right, and it is still just exceeded by a few points, so we would still give benefit of doubt for a potential expanded flat structure to hold. But anything beyond that, I think if we are within the fifth wave rally, then it's going to be very difficult for us to hold on to the short, and we should not be holding short positions. So if you don't have any positions at all, then it's good to remain on the sidelines and await for a price break below 2918 and ideally below 292875. But the only reason why we adjusted is due to the diverging scenarios on the 4 hours and the daily chart. All right, the daily chart is showing an amazing bearish diverging scenario, whereas the RSI is completely lagging behind. You look at that RSI completely lagging behind and with price action rallying forward. So this is it's a very promising case of a potential bearish reversal ahead. Let's see how the price action is shaping up in the next few hours, and we'll take call from that point onwards. GBP USD. There you are. So the structure, if you look at the wave structure, it is still completely in control with the bullish on the bullish side with an impulse complete followed by a corrective ABC also complete, and then we've got the next wave 3, that's one of 3 done, 2 of 3 done, and the third wave is underway. It's extending further. That's a good sign actually. And during the Tokyo Sydney overlap, the 5 waves lower, that expanded flat structure which we were talking about is also bang on target. The expanded flat structure has turned out to be correct. It is right. It has bounced right from 2560s, and now it's been slow as we enter the London Times. But believe it or not, that bottom could be in place, and we are now heading towards 2800 possibly. That's the structure. We can bring out the 4-hour chart quickly. There you are, the 28, 2788, 28, 2800 close to. That could be the first target. Unless it is forming a very complex, a WXY kind of a scenario, we may see one more drop lower. If it is if it is producing a combination, if it's a combination, only the time is going to say if it's going to produce a combination or it's going to rally from here. But it can always produce a combination. That is a 335, which could be W, and if it's a 3-wave rally, it could be X, and then another other 3-wave drop, which could be Y. So if it is a WXY, we will have to wait for a couple more days, brothers. All right, but at least for now, it looks good on the north side with the RSI also rapidly pushing through the 60 mark. All right, the Bitcoin. Okay, we booked profits in one position in Bitcoin. We had opened two, so we always have a habit of taking partial profits off the desk. A partial profit was taken, but Bitcoin story remains absolutely unchanged. It's around 97,229. We got in around 96,000. So we are up already 1,200 points, but it's a long way to go. It's not only the 99, you see the 99 mark is taking the previous resistance out there, and 103 is the next one, which is taking wave D of the triangle, and that's an extremely bullish signal. Tell you what, sir, the moment it takes out the resistance line at 101, we enter, technically we enter into a buy zone, and after a consolidation, it's very important to understand that this consolidation is just like a spring which has been held between our fingers, and when it is released it goes up, it shoots up like a rocket. So the moment 101 is cleared, I mean it can come back and test one last time, but then the next move is going to be absolutely amazingly faster. We'll try and capture, if we still have one position, so we'll try and capture until 103, and then we allow a break lower backside test, and then we enter again, or we continue holding the existing position and we add further on a test. All right, that's the strategy going forward. And we go back to the last one, the Solana. Solana was, when we saw last time, it was carving a third of third wave, they're extending the third wave, and that's what exactly has happened. So the third wave is extending, and we have got possibly, let's move this on the right hand side. So the path is clear, it has followed the path until now. So we've got wave 1, wave 2, and then again wave 1, wave 2, and the third wave is underway. Unless and until this pattern is a triangle or an expanded flat, prices will not ideally revisit lower, but it will push higher. Okay, only if it is a combination WXY in the forming where you have a 3 down and 3 up and another 3 down, we will revisit 167 or so. Otherwise, the next target ideally is seen around the 181 mark and 192 mark. All right. So Solana remains in the bullish territory and continue holding long positions. In fact, if you are wanting to contemplate further long positions, then you can also do that. But it's 173 right now. If it revisits 167 on a corrective decline, you might want to add further. Remember, we got long on the second time around 167, so that is just about 500 points right now, not more than that. So we'll hold on to the position, at least carry towards 192 or maybe 200 levels. All right. One last chart which we haven't visited in the recent times is the volatility index. And an idea of what this volatility index is doing can give us a lot of insight of what the stock markets are up to. Because I just saw the Dow Jones and the SPX, which are again in a sideways consolidation, and here you see is a sideways consolidation as well. So but the good point is it's not breaking below the previous low. It's been consolidating, but it's not breaking below the previous low here. Now on the 19th December 2024, it's far away from that low. No further low has been printed after 19th December. In fact, after July 2024. So that is wave 1, 2, and then 1, and series of maybe a triangle within a triangle is possible here. We'll keep an eye here. The first resistance is coming around 17.20 now. A push above 17.20 would trigger a breakout. At that point, we will come back on the Dow Jones as well. All right, so let's bring the current session to a pause, and we'll be back again after a few hours to touch base in the New York session number 2. Until that, once again, thank you for taking the time to be present here, and until the next one, take care and good luck. Goodbye.